Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from SmartCon in New York City. Joining us for the segment, we have Fernando Vazquez. He is the president of capital markets at Chainlink Labs. We're here to discuss the most significant developments in institutional crypto adoption this year. It is great to have you with us. Welcome to Trade Talks.
Thank you for having me.
Got it. So let's talk about that. Why are major financial institutions adopting this type of technology?
I would argue it's for two main reasons. People finally realize that a tokenized format is more efficient than what we've seen for equities in the past, right? They have been dematerialized for quite a while, but what is tokenized, you have a single golden source of truth that helps with distribution of market data with corporate actions. You don't need to reconcile, after the fact. Everything's on the same chain. Beyond that, people realize that, all of a sudden, you don't need a ledger for payments and another ledger for the asset, right? Everything is on chain, and that gives you programmability. You can also composability. You can get a lot out of that, both in the front office, middle office, and the back office. But beyond that, it's not just about efficiencies.
Right.
Actually, by holding something in a tokenized format, we can give you more utility. Once you become a holder of the asset, you can do something with it. I think DeFi has shown that. You can set a tokenized, let's say, fund or security to a DeFi pool and borrow stable coins against it. You can send that to a prime broker to trade at Coinbase and eventually at Fidelity or any other broker. So it's both efficiencies and utility.
So what do you think were the most significant developments that took place this year? Why does it matter behind the headlines?
Yeah, what matters is that, one, the regulations are finally ready. There's a recognition from the TradFi side of the world that, again, by holding an asset in this tokenized format, we can bring utility, and financial institutions want to differentiate each other.
Why do you think use cases are moving from the pilot phase to actually being in production? What do you think it took to make that transition possible?
One thing is that we've shown by doing lab transactions with partners like UBS that this is actually workable, that it was end-to-end. And we started with fund tokenization. We work with our friends from UBS. We use a data transfer agent, so we could benefit from having a single source of truth on chain. And beyond that, was to prove that you don't need to change everything overnight. You can, even with a data transfer agent and a tokenized assets, you can keep using your traditional payment rails like Swift. So I think we proved you can organically grow into a tokenization or token power financial ecosystem. It's not about disruption. So there's no need to panic. There's a way to, again, nicely grow into that. And we're not moving fast and breaking things.
Right. So let's learn more about the Chainlink ecosystem and how you're powering these deployments, right? Whether it's data, cross-chain compliance, security, data governance. How do these standards help to define and fit that progress that we're seeing within the traditional institutional space?
Yeah, because when you do something on chain, right, and you want to hold an asset in a tokenized format, you still need to interact with the outside world. Mm-hmm. And for that, you need data oracles. There's also recognition that in the future, even with blockchain, there will be multiple blockchains. So there is to be a way for you to connect different blockchains with each other. Traditional core banking systems with on-chain services. But as a regulated institution trying to get into this space, you also need to follow regulations. You need compliance. And for certain use cases, you don't want your trading data to be disclosed to other participants. You need privacy. So we're building all those building blocks. The data primitives, the cross-chain communication primitives. We're also building the privacy primitives and compliance. Once you have all these 4 building blocks, you can safely transact on the chain. That's what we offer.
And that's to your point, we're moving beyond efficiency and really what's utility.
And to utility.
Right.
The efficiency, that's a given.
Right.
And by bringing the utility piece, I think will help a lot of financial institutions take the leap of faith.
Yeah.
Right? And we've proven it with clients.
So when we look ahead here, what should we expect? Will we see broader tokenization programs, more interoperability, more stablecoin integration? What do you think the next year or two could look like?
I think it's going to be about adoption. We've seen many experiments over the years. Some of the reason that those experiments didn't go anywhere is that there was no regulatory clarity here in the US. that's finally changing. But before that, now we are seeing there are partners like UBS, Stoops, and others who are willing to try this in production. No more experiments, right? And as we build a track record, that's going to create a virtuous circle that will bring others on board.
Appreciate the insight, Fernando. Thanks for joining us on Trade Talks. And thanks for joining us from SmartCon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.